What is up, investors, and welcome back to the Everything Crypto Show. I'm your host, Everything Crypto, here to bring you the latest and most important news moving the crypto markets. Now, as always, please remember that nothing on this channel is financial advice. These videos are for viewer education and entertainment purposes only, so please invest responsibly as I want this community to thrive in the long run, and I love and appreciate you all. And on that note, we have some serious stuff to get through today, including Charles Hoskinson firing back at Michael Saylor, Circle actually fully disclosing their balance sheet to the general public, as well as some huge upgrades on the Cronos chain, as well as an update on the Celsius lawsuit. So without further ado, it is time to sit back, relax, grab that morning cup of joe, and enjoy the show. Now, for starters here, if you have not yet joined this giveaway on Twitter, the winner will be announced on Monday, so in 2 days, definitely go ahead and do join that giveaway. And if you want to learn more about this project, you can check out yesterday's video to learn more about Dragons of the West. Now, taking a look here at the Bitcoin chart on the weekly, what you're going to notice is that we are back down into this mid 20K range, currently sitting at 20,806, and we have actually discussed this multiple times on the channel that until we see a break above that 200-week moving average at 22.5K, I am treating every move to the upside on Bitcoin as a bull trap, and we literally did say it right here. Green is nice, but unless Bitcoin can break that 200-week moving average at 22.5K, we are still bearish. We need to see a weekly candle close above to flip bullish. That means that Bitcoin would have to close a weekly candle above that 22.5 thousand mark for us to consider the fact that we might see a reversal. And until then, that is just these market makers and whales playing games. And as you can see, since Bitcoin did bottom out here at about 17.8K, I mean, it rallied like over 25% almost all the way up to that 22.5K level. However, it did get rejected, and since then we have gone back down to the downside. And then taking a look at Ethereum, it pretty much paints a similar picture here where we're actually like right on the 200-week moving average, but we are well below that 2018 all-time high of $1,400. So Bitcoin and Ethereum are in a little bit of like opposite scenarios right now, where ETH is well below 2018 all-time high, but actually above its 200-week, and then Bitcoin is just above the 2018 all-time high, but well below its 200-week moving average. And if we actually take a look at the ETH to Bitcoin valuation, we're seeing a little bit of a relief rally here, bouncing off this long-term trend line of support. You can see that we started landsliding on the ETH to Bitcoin valuation in early May, and we are seeing a bit of a bounce here. Now, this bounce is actually a lot stronger than the rest, so I would like to see if we do continue this uptrend, but I do predict that as long as the bear market continues, that Bitcoin will outperform ETH, ETH will outperform alts, as that is the function of a bear market, and therefore I do expect a breakdown of this trend line at some point. So now we're going to take a look at the evolution of the Atlanta Fed GDP Now estimates for Q2 of 2022. And if you have been with the channel for a while, you know that since July 1st, we have been saying we are officially in a recession in the U.S. And that is because we already had a first quarter of negative GDP growth. And I just see no way that we had some positive GDP growth in the second quarter, which does lead me to highly believe that the U.S. will actually officially declare a recession on July 28th when the second quarter of GDP data is released. And now the estimates are also starting to account for this. They are also beginning to come in just slightly negative. However, it is still a sign that the U.S. economy is in a technical recession, and this could definitely create a freak out in the markets, especially if we see a recession announced, but inflationary pressures are still continuing to persist as well. And that's honestly something to remember, is that just because a recession hits, it doesn't mean that inflation is going to start going down. We can be in an environment where inflation is high and we are in a recession, and in my opinion, that's like worst case scenario, but something that we do want to be ready for as long-term investors. Now, this was a really good thread here about Bitcoin miners fighting to stay solvent, and we basically covered a tweet yesterday that said how JP Morgan cites Bitcoin miners have brought their cost down from 24K to 13K. And I mean, we did discuss why these miners actually sell their Bitcoin. It's not because they want to, rather it's because they got a little greedy. They took out a bunch of debt to actually continue their operations when they thought Bitcoin was just going to go to the moon, and now they are actually being forced to pay off this debt, and that's why they need to sell Bitcoin. So this thread does a really good job of explaining it. but it basically says, what do you do if you're a Bitcoin miner in March 2020 and you see the start of a bull run? You raise capital, order ASICs, build infrastructure, and mine that sweet Bitcoin. For the first time, miners had deep access to debt capital markets as mining was seen as a more legitimate industry, and they were basically like just leveraged all over the place on Bitcoin. They were long Bitcoin via loans, long Bitcoin via mining, and long Bitcoin via hodling. Then what do you do with the mined Bitcoin in a bull market? You hold on to as much as possible. No/limited hedges are needed. And then miners begin to order ASICs at breakneck speed, but the massive demand and COVID supply chain challenges led to 6 to 18 a month lead times. So basically, these miners were actually ordering CPUs to continue mining that were coming in like well later. Then China, who controlled 2/3 of the hash rate, banned mining in July of 2021, and U.S. miners witnessed their percent of total hash rate skyrocket overnight. So the Bitcoin difficulty adjustment eventually offset this advantage, as China did actually ban mining. A lot of this profitability was brought into the U.S., but miners continue to make outsized profits as mining equipment migrated from China to the U.S. At one point, miners were even hitting profit margins as high as 90%. However, then the macro tumbled, the Bitcoin prices crashed, and capital markets dried up, and ASICs are flooding the market, energy costs are rising, and debts are coming due. So effectively, these Bitcoin miners are selling to stay solvent at this point. Not all of them, a few of them are well capitalized. However, obviously some of them, as they were sort of in this rush to get themselves set up to mine that sweet Bitcoin, they are now having to sell that Bitcoin as it goes lower just to stay afloat. So a very interesting sort of relationship there between miners and Bitcoin, and how they also are forced to liquidate at some points. So we also got to talk about the Ethereum merge, which is now set to take place in September. And I mean, people have just been doubting this merge, thinking that it's not ever going to come. And I have been saying that I do believe it is going to come eventually. And no, I do not believe that a $1,200 Ethereum has priced in the merge whatsoever. I mean, look at where we are right now. Like, we're below 2018 all-time highs before anybody even knew what the merge was. So no, I don't think that it's priced in. And the network's mainnet, the 9th shadow fork, MSF9, went live 15 hours ahead of schedule. So as opposed to constantly being behind, it looks like maybe now the devs are getting ahead of the ETH merge. And a shadow fork is a smaller test fork that concentrates on a few minor adjustments that must be made when the Ethereum merge takes place on the primary protocol. And basically, the test ran on a more intensive network as revealed by one of the devs at the Ethereum Foundation. So they are just really trying to put Ethereum to the test right now to make sure that it can actually handle the merge on the main net. And here, one of the devs actually tweets that the merge is scheduled for mid to late September and could be more aggressive in some places to actually push the merge up even more. Now, what we're talking about here when we talk about the merge is the difficulty bomb, or rather a part of the merge. And the difficulty bomb refers to an abrupt rise in mining difficulty, which is essentially designed to dissuade miners to sticking with the proof of work algorithm. So it's going to start off with this difficulty bomb to actually make mining a lot less attractive, and then they are going to conduct this move from proof of work to proof of stake in coming months. So it looks like the merge is coming soon, and yeah, this is definitely something that I am excited for. However, it is sort of an interesting relationship with Ethereum, as obviously they do have like a team behind it that sort of is here to give us these updates, and that is why MicroStrategy CEO Michael Saylor says that ETH is a security, as he thinks that a crypto can only be a commodity if there is no issuer and no one is making any decisions on the network, saying that ETH is a security because there is a management team, there was a pre-mine, there is a hard fork, and there are continual hard forks. Now, Charles Hoskinson, who is obviously the founder of Cardano, otherwise known as ADA, he actually does call Michael Saylor out for being a toxic Bitcoin maximalist. And while I do really like Michael Saylor and his thesis behind Bitcoin, I do also have to agree that Michael Saylor has sort of taken this stance now that Bitcoin is the way and everything else is a scam or a security. And we did actually mention in yesterday's video that even though there is a team behind Ethereum and there is a hard fork, there was a pre-mine. I don't necessarily think that that means Ethereum should be considered a security. However, that's what Michael Saylor is actually pushing for. He's pretty much pushing for every crypto to become a security except for Bitcoin. And Charles Hoskinson says here that Bitcoin maximalists are often the most difficult, toxic, and useless people to engage with. I mean, he sounds a little bit aggressive. He sounds like he really doesn't like Bitcoin maxis. And I'm by no means a Bitcoin maxi, but I am a big Bitcoin believer. I think you have to be a Bitcoin believer to believe in crypto as a whole right now. It is the OG daddy Bitcoin, and there is no denying that. However, I definitely also do believe in a lot of the rest of the ecosystem, and I don't think that only Bitcoin will succeed. In fact, even as a Bitcoin, someone who does believe in Bitcoin, I think over time Bitcoin will lose market share to some of these altcoins like ETH, like XRP, things with more use case that are not only a supply-demand game, which for the most part Bitcoin is, because who are we kidding? Bitcoin doesn't really have much utility when you do compare it to some of these other projects out there. Now, we need to talk about Circle here, as they have finally released a full breakdown of their USDC reserve assets. But first, I do just want to ask that if you enjoy the content on this channel, please consider hitting that sub and like button, especially if you are a crypto investor, as the goal here is to pretty much bring you all the news that you need to know on a daily basis. But you do not need to do all of the digging and research that we do. You just got to sit back, relax, and enjoy the show with that morning cup of Joe, as always. Now, also go ahead and drop your questions in the comments down below, as we do have the second Q&A stream going on tomorrow at 9:30 a.m. Eastern Standard Time, and I do hope to see you all there. So now, once again, taking a look at USDC here, rather Circle, and taking a look at their balance sheet, you can see here that they pretty much released the full USDC reserve assets, and if you scroll down to the very bottom here, the actual total U.S. Treasury securities owned is 42.1 bill, as well as the total cash held at U.S. regulated financial institutions coming in at 13.5 bill, bringing you a total of 55.7 billion in total USDC reserve assets held on behalf of the holders. And the way we can actually verify that these reserve assets are enough to cover their customers is by just taking a look at the USDC market cap, which comes in here at 54.8 billion. So that means that Circle actually does have a surplus of about 900 million to actually protect their customers. And that is what we want to see from such a big stablecoin issuer. We want to see that they are taking their balance sheet seriously, that they do have enough assets to actually support all of their customers. And I really believe that if USDT and USDC can remain strong, that will bring some strength back to the crypto markets eventually, as really the stablecoin FUD was one of the big things that started this whole downturn, beginning with the whole Terra Luna situation. So yeah, really good to see that USDC is becoming more transparent with their balance sheet. Now, we have a big update from the Cronos chain here, and basically these upgrades just have been coming out the gate lately. Like, we saw the Gravity Bridge come last week, which is actually going to make Cronos a lot more interoperable with ERC20 tokens. And now the Cronos chain has announced that they have just increased the block size double. It has gone from 20 million to 40 million gas. And what does this mean? This means that Cronos chain can process twice the previous number of transactions per day, following a previous doubling that took place on May 15th. So on May 15th, Cronos chain went from 10 million to 20 million transactions, and now it has once again doubled from 20 million to 40 million. So just this exponential growth, and that is absolutely what we love to see. They also say here they do not expect the increase of block size to impact transaction fees in a meaningful way for the time being, even with the fee market mechanism introduced during the last upgrade. And that upgrade, for those of you who missed it, was basically that when the network is seeing less usage, the fees will be minimal, and when the network is seeing a lot of usage, the fees will be a bit higher, very similar to ETH gas fees. And transaction fees are at actually one of the lowest levels since launch, mainly due to the lower CRO to USD exchange rate. Going forward, the Cronos chain team will continue to optimize the chain in order to support even more throughput for all DeFi and Web3 gaming use cases. I love how they mention that, gaming use cases. We will share a more comprehensive roadmap update in a few weeks, and that is something I am definitely looking forward to. Now, last but not least, we are going to wrap things up talking about Celsius here, as they have faced a new lawsuit lawsuit. Someone pretty much just calling it out for what it is, which is a literal Ponzi scheme. And effectively here, Equities First, a private lending firm, has been revealed to be owing Celsius Network $439 million. And the debt owned by the Indianapolis-based firm will form a part of Celsius's assets that customers would depend on for the withdrawal of their assets. So Celsius CEO Alex Mashinsky earlier revealed the firm was being owed by an unnamed private lending firm, and the report said that Celsius first borrowed from Equities First in 2019, but upon trying to repay its loan in July 2021, the lender said it was unable to return its collateral on a timely basis. So the filing showed the debt is made up of $361 million in cash and 3,765 units of Bitcoin. So now they have been faced with a lawsuit by an investor who said the company operated like an actual Ponzi scheme, and he is not incorrect at all. As much like a literal Ponzi scheme, Celsius could only maintain its yield rate promises by continuously bringing in new investors whose new influx of money would be used to pay off the yield for old investors, and that does really appear what it seems to be here. Celsius just borrowing money left, right, and center to maintain that unobtainable yield and just continuing to do so until eventually one person is left holding that bag, and that is the literal definition of a Ponzi scheme. So Goins explained that his purchase of Celsius financial products only resulted in investment losses because of the company's actions. The plaintiffs also argued that the recent market meltdown has revealed that the crypto lender lacked the assets to meet withdrawal obligations, as definitely revealed by that $1.19 billion hole in their balance sheet that we did cover yesterday. Now, Celsius went ahead and actually responded here with their first day hearing taking place on Monday, providing an opportunity for the court to hear from Celsius and consider next steps for process. There, we will reiterate that we saw Chapter 11 protection to begin a process designed to maximize value and recoveries. The vast majority of our creditors are our customers. We know everyone is awaiting the specific details that become available during court proceedings. To start, we will provide an update following the hearing. So basically, they're just going to hop up there for their hearing and remind people that they are trying to do Chapter 11 to actually protect their customers and to try and recover their assets, when really they just got backed into a corner, okay? The CEO went radio silence for a month, and he did not say anything until they actually announced they were declaring Chapter 11 bankruptcy, and we did see them paying off a bunch of loans across DeFi, but cannot yet confirm if that was their own money or if it was actually their users' money, and we still see that they have a $1.19 billion hole in their balance sheet. So it looks really messy, and I don't know how they're going to work their way out of this, but they actually do reveal their plans to compensate depositors despite this $1.19 billion hole. And basically what the CEO says is to bridge the gap in its balance sheet, the company plans to engage with all who knows what that word says, including the official committee of unsecured creditors, in a productive dialogue with the hope of building consensus around the debtor's potential Chapter 11 bankruptcy, ultimately a transaction that will maximize the value of the company's business for the benefit of company's creditors. So to be honest, this just sounds like a whole bunch of baloney to me. It doesn't really sound like they have any sort of plan yet to actually go ahead and pay their customers back. Rather, they need to file for Chapter 11 bankruptcy, and they're going to see what they can actually do and if they can make good on these returns. However, I will remind you, first of all, I hope if you do have any money in Celsius, I sincerely do hope that you get it back. But I will remind you that we just saw a case with Mt. Gox. This was an exchange that actually halted withdrawals in 2014, and they are just starting to give their users money back now. So this definitely could be something that does take a while before these paybacks and refunds actually do go out. So on that note, I hope you guys did enjoy the content in today's video. I will catch you all in the next one. Peace out for now.